And joining me now for a look at the day's markets action is Odwa Magwentshu from Momentum Securities. Odwa, thanks so much for your time this afternoon. So volatility still remains the name of the game. Even though we are seeing some positivity come through, we still have those, tariffs spooking investors. And our focus has shifted from China, Mexico, and Canada to the tit-for-tat playing out between the US and Europe. How concerned are you about, the possibility of this tit-for-tat potentially becoming a fully fledged trade war?
I think it's expected, and we shouldn't be a shock going forward at this point. This tit for tat, it does seem to be the interesting thing that's changed since the beginning of the year is that it's no longer just targeting the neighbors and China. Now it's spreading across, and we are expecting that this could escalate a bit more, even including Britain, etc. It does seem that. It doesn't target people with a similar policy point of view with the United States. So they might be in the clear in the moment. However, overall, I do think it's going to spear out. However, I do also see that it is leading to other partnerships being in focus. For example, with us locally, we have the EU in South Africa for a summit. First time since 2018. So as much as it does bring a lot of uncertainty, I think thanks to the many elections we had last year, a lot of negotiations going to go between nations in terms of what the trade outlook is going to be.
And there were that investment pact bringing in over 90 billion rand for South Africa. So that'll be interesting to see how that plays out. Talking about tariffs, we can't not talk about inflation. And we had inflation figures out this week. Yes, CPI cooled, but we're still not close to the Fed's 2% target. At the end of last week, we also saw job growth, those labor numbers missing estimates coming in at around 151K versus the 160K that was expected. Now, with those two prints out and, further turmoil that we've seen on the back of the tariffs, are you pricing in perhaps a shift in the Fed's tone come next week, perhaps a bit more hawkish or even a bit more dovish considering those recession fears?
I do think that the tone will definitely change, and I'm leaning more towards the hawkish outlook. As inflation is also a lagging indicator, meaning that the bearings of what's happening right now won't be seen in this. Wasn't seen in the previous print that came out this week. It most likely won't be seen in the next print, and that's for me. I think is what we also have to take into consideration is the result of the implementation of these tariff negotiations or scares that we're having. So that's one point as well. I want to also point to the PCE numbers which came out last week, which was slightly higher than the CPI. And the PCE tends to be the Federal Reserve's indicator for inflation. So I think that's something we have to consider as well. So all of that being said, I think the more these tariffs are coming about, and they're not as the United States is not rolling over and not getting any retaliation. And I'm seeing a lot more people getting more brave in terms of responding to the United States. And for me, I think that it also then dampens the effectiveness, and which might lead to the United States having to be a bit more brazen in terms of the amounts. As today we saw 200% tariff instead of the 25 or 10%. So I do think that it's causing hostility, yes, but it's also an opportunity. It's a crisis where we must find opportunity, and the opportunity is other trade partners and diverting potentially a bit away from the United States.
Let's look at some company news out today. Outsurance delivering an over 50% jump in earnings as there were less hail and flood claims reported. I wonder if that'll continue to play out, considering that we've been seeing heavy floods over the past few months. So are we likely to see the kind of growth that we've been seeing in this or in the last reporting period come future prospects?
50% is a very large number. So I think that we can't expect that to be the new norm. And as you rightfully said, we've had a lot, especially in Joburg and KZN, had a lot of floods, and I'm anticipating a few more claims because of that. However, the backdrop still remains very positive for the business, one of which, as you rightfully said, which was above 50% return, was the lesser claims. However, we also saw very strong growth in terms of new business and also underwriting. And I think then instead of 50%, we are seeing a high double digits. We could see high double-digit growth for the business.
Renigen, in the meantime, really having a good day. That share price soaring. Last time I checked, it was up over 40% after the group announced that it has completed the first sale of liquid helium from its Virginia gas project. What have you made of the news, Odwa?
It is very welcomed. Renigen was very promising when it came on the scene, and unfortunately, social media hasn't been kind to them, and also the delays that they've been facing. Just a lot of things have been coming out the woodworks, just hindering the stock. So this is a very good sign, at least in the first steps. However, also it's good. It's a good sign, but we still need to see the longevity, the sustainability.
Yeah.
Are they going to be able to produce this for a long period? Again, remember we stopped. They had plans to already start a while back. However, there were rumors of leaks in the tanks that keep the helium, etc., and that pulled us back for a while. So hopefully we don't go back to that point in time again, and we keep this momentum and we keep the sustainably producing helium and also liquid nitrogen gas. And that if that continues, I mean, the share has definitely been hit from the 30 rands it used to trade not too long ago to the single digits it's in right now, and I'm looking forward to an upside.
Crossing fingers and toes for that one, Odwa. Before I get your stock pick, let's take a look at the MTN stable. MTN Rwanda slipping into the red. Is this one you follow? And I mean, Africa really proving to be difficult to navigate for MTN, even though we've started seeing some green shoots coming through, but that not really filtering through to the numbers as yet.
No, 100%. The interesting thing with these results, if you look at top line revenue for revenue, this year they performed better. However, it's the cost that's hurting them terribly. So you see, firstly, costs from the direct network, and then further bigger costs, almost double, coming from regulations and government. Sorry. So I mean, I think that in particular is again the issue with dealing in Africa.
Yeah.
They faced MTN as a group faced similar challenges in Nigeria. Now it seems like the issues of going across to Rwanda and coming in at a big loss right now. MTN has very large potential, and if they could just get these issues under hand, we will see some great potential in the business.
All right, let's get your stock pick. What are you hanging your hat on this afternoon?
I'm following the budget announcing about 1 trillion with regards to expenditure on infrastructure, and Rubex is the stock of choice today. I believe they have, with this, is going to increase tender activity, and the business has been good financials, very low or nice PE at 7.5. I'm looking forward to this company benefiting from what happened this week with the budget speech.
All right, Odwa, thanks so much for joining us and taking us through trade at midday. That was Odwa Magwentshu from Momentum Securities.